All right, welcome to today's live stream, everyone. Welcome every new community member and bag holder. Hopefully, you are having stop losses in the market because it's looking bad. It's looking red, just like my office. Let's run the intro, and right after, we'll go into take a look at Bitcoin. All right, what's up, guys? If you're new to the channel, you know what to do. Hit that like button and subscribe if you want more content like this one. I'm just going to jump right into the charts here, and we're going to take a look at Bitcoin. Where is it? It's right there. All right. So, I posted a tweet yesterday saying, obviously stating the obvious, like Bitcoin is in a range, and was it yesterday? I don't know, probably not. Day before. So I said we were testing the range lows, and if we break the range lows, we are most likely going to be headed down to 30K. There's no magic involved, it's just a very obvious level here around 30K. It's not only it's an even number, and it's also a very clear level, which it makes sense for Bitcoin to bounce at 30K. So I'm not going to say exactly as expected, but I think most people were somewhat expecting some type of bounce around 30K, which we got. Now, that does not mean that Bitcoin has found the generational bottom, right? It's not going to be, this is probably not going to be the bottom of a lifetime. You know what I mean? So the important thing to see here, when Bitcoin bounces at an obvious level, it's important to wait, especially if an investor, long-term trader, a swing trader, you want to see that confirmation of strength. You want to make sure that Bitcoin is seeing some continuation of this somewhat bullish price action on the lower time frames, right? Because the downtrend is clear. I mean, the local trend is quite clear. The fact that we broke below the range, there's nothing bullish about this. I mean, give this shot to anyone and say, do you like this? Is this bullish? They would probably say, not really, not really. It's not really the picture of health and fitness, right? It's not the most beautiful looking bullish chart from a buyer's perspective. Now, this is the daily, right? So, like I said, we did bounce nicely off the 30K region. But when I see something like this, the first question that pops into my mind is what level does Bitcoin need to reclaim for me to feel confident buying, right? Which level, and we're talking about obviously previously support, right? So previous support levels. What previous support does Bitcoin need to reclaim as support once again for me to be bullish? And that same region will also be where we are most likely going to see a rejection if we are going to see a move further down. And I'm obviously talking about the 35K region, which is right here. Let's add a level, and let's also add 35 right here. By the way, guys, if you have any questions or want me to cover anything specifically, any short request or any whatever, let me know and I'll cover that in the live stream. I don't have a lot of time today, so I'm going to try to keep it a little bit shorter and simple, because I need to run and pick up my son from daycare. So yeah, that's that. So 35K. Now, why is 35K important from a technical perspective? Well, I would say it's quite obvious, right? You have a very obvious horizontal support and resistance area that we broke quite nicely yesterday. It's a very obvious level. We can extend the previous range lows here. We can try to adjust it a little bit here to make it a little bit more cleaner, adjust it a little bit more to historic price action, try to get that 45K level in the middle if it makes sense, and it kind of does, right? So I'd like to have it right there. Now, having that as a level kind of incorporates most of historic price action as well. It kind of looks good, right? And I'm always of the opinion that technical analysis should not only make sense from a technical perspective, right? The rules of TA, if you can even say that there's rules to TA, but it also needs to make sense from a, what I would like to say, creative perspective. It needs to look good, right? It needs to look good. And that's why when I see people having, lines and boxes all over the chart, it just looks very, very messy. When it looks like a chaos, it probably is. So if somebody gives you a chart and it kind of makes no sense, it looks chaotic, it probably is, right? You should try to keep it as simple as possible. Try to keep it as simple as possible. So we look at these levels right here. 30K has been hit. There is a bounce. The bounce is nothing, right? Let's ignore this wick because I do think it's only on Binance. I don't even know why I'm on Binance. I should be on Bitstamp. That's usually where I'm charting, but whatever. We're on Binance. So what level do we need to reclaim for Bitcoin to show strength? Well, obviously it's the 35K. Now water is running in the background. Hopefully not. Hopefully my girlfriend is not taking a shower again during my live streams. I've told her to maybe not take a shower when I'm having the live stream. Let's see if the water stops running. Anyway, hopefully it's not too. Hopefully it's not too bad. Right. Now we're most likely going to see price come up and test this level, right? Now the question is, what will happen? And the water stopped running. Nice. So what will happen when, or if, probably when, Bitcoin hits the 35K level? That's going to be very, very important. So what happens is, I do think we're going to see a bearish rejection right here. I think we're going to see this level being used as resistance, right? Now, the longer price stays down here, the higher the probability of 35K acting as resistance. Now, why I'm saying this is the longer price stays below or above a level, the longer the market has to accept that level as valid, right? So that's why when you have like a quick peak above, like a fake out, you usually see a strong move in the opposite direction, right? When price is trading up here for only a couple of hours or a day, it's not going to give the market enough time to accept this level as support. So that's why you get fake outs, right? Same thing happens with this level as resistance. If we reclaim this level today or perhaps tomorrow, it increases the likelihood of this level actually holding as support because the market has not given enough time to accept this level as lost, right? Now, if we do trade down here for a while and you add the daily 20 EMA, right? Now you can clearly see here that the daily 20 EMA is slowly but surely making its way down here. What happens when it hits this level without price testing it, right? What happens is that the daily 20 EMA will add great confidence to this area as resistance and vice versa as support. Of course, it will also add a lot of strength as support with that added confidence. But I do think that if the first retest of this level does not happen before the daily 20 EMA coming down and trading down here, I think the probability of this level right here acting as resistance for a move even lower is much, much higher than if the Bitcoin reclaims the 35K region today or tomorrow, right? Because the way I'm trading is, especially looking at a higher time frame chart like this one, I'm using, focusing most of my energy on the daily 20 and the daily 50 EMA. I really like water, by the way. Remember to drink water. Hydrate. It's so important. Right, so we have the daily 50 right here. It's literally life-threatening not to drink water, if you weren't aware of that. So we have the daily 20 right here and the daily 50 right here. Now that's my two most important parts of trying to understand trend on the higher time frames, right? So I will never be able to long an asset that is below the daily 50 or the daily 20 EMA. Now remember, I'm not a long-term trader. I'm not an investor. I don't care about long-term investing. I don't care about holding products for the long term. I only care about trading my system, my very own simple system and one setup. That's the only thing I care about. That's the only thing I focus on. So I will strictly and religiously follow the rules of my system, which are if you're below the daily 20 and if you're below the daily 50 EMA, you are looking for shorts, right? And the shorts are going to be based on the 4-hour 20 and 50 EMA, which I've just added right here. And where are the 4-hour 20 and 50 EMA? Well, they're right above this previous range lows, right? So what I do now is I add the Fibonacci retracement tool. And I'm going to see like two of the most important levels on the Fibonacci retracement tool for me is the 50, the 0.5, and the 0.618. Now, we're probably going to see the reload zone, the area around 0.618 up in this region, around the 20 EMA, and the 50 is going to be at range lows, most likely. I mean, it's not that hard to figure that out. So you see that you have the 50% level of the fib is in perfect, and I repeat, in perfect confluence with the previous range low, the area that we broke to the downside. So if we come up here and we print a 4-hour bearish engulfing candle, I'm going to start looking for shorts because that is my entry trigger for a trade. A 4-hour bullish engulfing or a 4-hour bearish engulfing with the stochastics RSI, the moving averages, and all that fun stuff. That is when I will start looking for shorts. Let's set a trend line here as well. Let's remove that trend line because I don't like it. So that's what we're looking for, right? And if we can reclaim this level, if we instead see something like this, break above the reload zone and then bounce here, that's when the lights in my office will go back to being that chilly blue, not chilly. Maybe this is chilly red. I don't know, but going back to blue, which is bullish because you can see blue candles. Would you ever trade rebounds at major supports after a sudden large move? So basically what you're saying is, would I ever try to catch a bottom? Well, I've just explained my system, and my system is a trend following system. And usually when you have a huge or a strong impulse move to the downside in a downtrend, it requires quite a large bounce for a market structure to break. And I'm not really interested in going long in downtrend unless the whole market structure breaks. And I want to see a bullish break in market structure before even starting to think about going long. Now, a bullish break in market structure on Bitcoin right here, let's actually go to a completely clean shot here to see if we can get a better view of this, a better perspective of this, right? Let's see. Let's remove everything right here. Right, so let's look at the very local trend right here, right? Let's remove everything. Right, so this is the local trend we're watching right here on the 4-hour. Now, what do I need to see for, well, you know what? I quite like that trend line. And I'm going to show you a trick, guys. I'm going to show you something that not a lot of people are using, but there's a lot of discussions on how to draw the trend line. Should you use the candle, the wicks, the bodies? Can you use wicks and bodies? I'm here to tell you that it doesn't matter. It does not matter, right? The only thing that matters is the general position of the trend line, right? And you should view trend lines just the way you use horizontal, just the way you view horizontal levels, right? A horizontal level is not an exact price, right? It's not an exact price. It's an area around a line, right? Like a buffer zone around it. So what I do is I use the parallel channel tool in TradingView, and I add a trend line like this, right? And then I copy and I try to fit the parallel channel to that trend line that I drew. I then remove the trend line, and I'm now going to try to fit, I'm now going to add this parallel channel and make it a zone, just like I would make a horizontal level a zone. And this is what you get, right? You get something that looks like this. Now, this would be my general area of interest. That's and there's multiple trend lines included into this channel right here. And I don't care about exact prices, exact levels. I only care about this general area right here. And this also gives us a pretty good clue on where we're going to have a break in market structure. So first, what we do is we add a um, the most obvious and the most significant horizontal level, which would be that one right there. You can go to the daily, you can see that it clearly aligns with the daily levels as well. And like I said, we have that 35 region right here, but in this case right here, we want a break in market structure. I told you guys that reclaiming the 35K region, which is right here, would indicate somewhat of a somewhat strength in the market, but I'm still not ready to go long here. What I need to see to go long is a complete bullish break in market structure, and that also means a reclaim of the daily 50 and 20 EMA, which is right here. Now you can see the confluence right here. I'm pretty sure you're starting to see the idea here, right? We have a somewhat of a downtrend right here. So this is a downtrend, right? Now, what needs to happen for this to break? Well, we need to get above this level, create a higher high and a potential higher low right here, right? So that would be my bullish break in market structure, and that would also be where we reclaim the daily 20 and daily 50 EMAs, right? So what we do here is we focus on market structure and horizontal level. We look at we ask ourselves, where is market structure breaking and what horizontal level needs to get reclaimed for that market structure to print a bullish break in market structure. And in this case right here, we have a perfect confluence between the daily 50 EMA and the daily 20 EMA in that area. If we add the Fibonacci retracement tool to the to the previous low, from the high and the low of this dump, you will see that the interesting area for me to short would be this area right here, and it's confluent with the daily 20, it's confluent with that trend line area, and it's right below the horizontal resistance area. You might even get a touch of the low of that resistance area, and that might be where I'm looking for shorts if my setup confirms, right? And I really like these setups where the invalidation of the short setup is also a confirmation of a long setup. That means you're entering close to invalidation. And when you enter close to invalidation, that's when you're going to get the best type of entries and the best risk to reward ratio on the trade. So keep that in mind. When you're looking for trades, always in the back of your head, keep that in mind. Like, what's my invalidation level, and can I get an entry as close to that invalidation level as possible? If you can, you'll have to try to do that, right? You're gonna get stopped out a lot of times doing that, obviously, but that's why I wait for confirmation. And in this case, the confirmation would be a 4-hour bearish engulfing candle. Here's a question: do you take into account fundamentals at all in your system, or you're trading only based on TA? I've developed this system based on 100% TA, so I'm trading based on 100% TA. The only part where I use fundamentals is I look at I look at the I look at two sites, right? I look at financialjuice.com and the economic calendar on dailyfx.com. I use the daily FX calendar because it's just cleaner, but on Financial Juice, you'll see that you have a economic calendar as well. So why am I looking at the economic calendar and fundamental events if I'm only trading based on 100% TA? The reason is because I'm trading the crypto and forex market, and recently I'm more focused on the forex market because I do feel like it's, in a sense, more reliable and consistent than crypto. But it's just a personal thing, right? But what I do is I look at the, so let's take crypto for example. Let's say you're not trading forex at all, so you're only focused on crypto. Well, what you want to make sure to do is you want to make sure you understand the impact of news event like these ones right here. This is, you have a lot of speeches coming out from the Federal Reserve, and given the current market conditions with Fed hiking rates, and you have the economic situation, the global economic situation, these speeches right here can be very, very important and actually really move the markets. But look at the news events tomorrow. Now you have core inflation rate right here, and inflation rate, that's the CPI data from US. This is market moving stuff. This is going to move. This is going to influence the price action on USD, which will also influence the price action on Bitcoin, which will influence altcoin and generally the whole crypto markets. These are news events that are very, very important to keep your eyes on. So why am I not, like, why do I care about this? It's because if I want to enter a trade on Bitcoin, right? I want to enter a trade on Bitcoin, right? And the CPI data is coming out 1 hour. Let's say I have an entry trigger here for a short, right? So tomorrow Bitcoin is trading here, and I have an entry trigger for my short, right? And in 1 hour, the CPI data comes out from US. Am I going to take that short? No, I'm not going to take that short, because having a 100% technical system, you need to make sure that the runway to TP is clear, so to say. If you have a lot of fundamental events while being in that trade, that's the fundamental events that might move the markets, because fundamentals, they move the market. There's no question about that. It's the technicals do not move the markets. The market move because of fundamentals. All that technical does is it shows you at what prices you might have big movements, right? So when fundamental news happens, it's going to move the market. So I'll make sure that I'm not in the market at any significant areas close to stop loss or something like that when there's a huge big fundamental events. So a great way to check that is have a look at the economic news releases calendar for the forex market, because that's also going to include the big events like the non-farm payroll, the CPI data, the FOMC and stuff like that, right? You guys probably know about FOMC because it's all over Twitter. Once they start talking about it and release some data of it, it's all over Twitter. All right, guys. So I actually don't have a lot of time left. I need to run and pick up my kid from daycare in about 6 minutes. So please, if you do have any question, please let me know. I wanted to say something about the traditional markets right here. So if you're, only looking at the crypto market, and you might say like, all right, Bitcoin is hitting 30K as an isolated event, that Bitcoin drop as an isolated market, it's a very good level. 30K is a beautiful level for a bounce, which we saw, right? But then you need to take into consideration the traditional markets as well, and I'm especially focused on what happens with metals, commodities, oil, the general indices. Like we have the European index here, the Euro 50. I'm looking at Nasdaq and S&P 500. Unless S&P 500 can really break this bearish market structure in the local, I mean, we have obviously some type of structure going here, right? some type of bearish structure right here. Unless we can really break this downtrend and start reclaiming important levels as support, do you really think Bitcoin is going to just all of a sudden start pumping? Because it's not Bitcoin that dumped yesterday. Everything dumped yesterday. This is the S&P 500 on the daily. That is a pretty nasty candle right here. And we broke below a significant support area, effectively creating a bearish market structure. Same happened with US 100, the Nasdaq, and you look at UK 100. It really like it's some explosive moves to the downside. Let's also look at the DXY. It's probably not breaking out today, but like this is not a there's like this yes, it's at high time frame resistance, absolutely, but it's not really a chart that tells me there's not a lot of weakness here. There's not a lot of weakness here, right? So usually the strength of the dollar means we're going to see risk assets dump, and that's what we saw yesterday. So this was a clear risk off move across all markets, right? Across all markets, not only crypto. A lot of people are talking about the situation with Luna and UST. Sure, that might weigh in as a bad fundamental event for the crypto space. And I would argue that if that happened while Bitcoin was dumping as an isolated event without looking at the legacy markets, it might have been because of that. But I don't think that has had a lot to do with the dump yesterday. And I don't think it matters, right? As a 100% technical trader, do I really care what happens fundamentally? Of course, I care about what happens, in the world economy. But looking at my trading system, I don't really care why something is happening. I'm only interested in the fact that it's happening, and I'm then going to ask myself, can I trade it, and what levels am I interested to be buying or selling, right? And that's about it. I see a lot of people having a lot of different theories on why this is happening, right? But I believe that most people are going to be better off, instead of asking why it's happening, ask yourself what could be happening and what levels am I interested in buying or selling if this or that happens, right? So make plans for different scenarios and get ready to trade those scenarios when it actually happening. So before I go here, I will give you my plans and my scenarios for Bitcoin and how I'm going to trade it. So the bearish scenario, which today I think is more likely. And why do I think the bearish scenario is more likely? Well, simply because we're in a downtrend. That's it. I want to see a clear bearish rejection somewhere between 35K and 38K. It's a big area. So somewhere between 35K and 38K is where I want to see a bearish rejection for me to go short. And the confirmation of that short would be a 4-hour bearish engulfing candle in combination with my other indicators. That's the bearish scenario. Now, the bullish scenario is a reclaim of the daily 20 EMA and the daily 50 EMA, and I can't really give you any details on exactly how that setup would look, because that's dependent on what price action does and how price action looks when that break in market structure happens. All right, guys. Now, yes, like Anne says, I need to collect my little boy. I'm gonna go to daycare and I'm gonna say, like, I'm a Bitcoin trader, I'm a crypto trader, and the market is dumping, so you'll have to excuse me. But yeah, it is what it is. Do you have a video on your trading strategy? Well, I have. I do offer private mentoring where I teach my system, right? Where I teach my system. I've been thinking about creating a course, but I am actually working on something different, which I'm very, very happy to potentially announce shortly. It's going to be like a mix between an interactive course and a mentorship. It's going to be very exclusive. It's going to be invite only. So you'll have to request a membership, and you then have to send me an explanation of why you want this, and I'll accept you if I think it's a good fit for the program. And the goal is to create a group of people trading one system, one setup, and just working on that, right? And just working on that and perfecting that system, and just working together to really, become a group of profitable traders. I'm really, really looking forward to that. All right, guys, take care now, and I will. Daycare is insanely expensive. Insanely expensive. Like, what the hell? And I live in Sweden. We pay like 50. Honestly, not guys. Sweden like has the highest, some of the highest taxes in the world. Like, we pay pretty much 50% of everything we earn is taxes, right? It's straight to taxes. 50%. I'm not kidding. And daycare is extremely expensive. But let's make another video on taxes and let's rant on that another day. All right, guys, take care, and thanks everyone for joining. I will see you guys next time. Bye.